Snapchat reported on Friday. Snapchat's a very commonly looked at. It's part of the social media perspective, and people look at Snapchat. I personally believe they look at Snapchat saying this is probably the worst social media. So let's see how they're doing. So this is their press release on their website. A couple of things. Daily active users increased 18% year over year to 347 million. That's awesome. Revenue increased 13% year over year to 1.1 billion for the quarter. That is awesome. Operating cash flow was $124 million loss, and free cash flow was $147 million loss. Now, why don't they compare it? Well, let's go down a little bit more to see what happens here. So this is their comparison, 3 months from 2022 to 2021. Revenue was up. Operating loss was up huge, though, 192 million to 400 million. Net loss of 151 million to 422 million. Okay? The 6 months, $438 million to $781 million loss. A couple other things. Free cash flow, $115 million loss to $147. Also an increase in that loss as well. In the 6 months, they went from a $10 million gain to a $41 million loss for the 6 months. Now, guys, this company has struggled. Let's go pull up our Everything Money software and let's go look at Snapchat. It's SNAP. Now let's go look at the income statement. We're going to look at revenue from year to year. 38 million in 2016, all the way to 4.4 billion. Now, I want you to imagine something. I come to you in 2016. I say, listen, I know the future of this company. I know exactly what the revenue is going to be in the next 7 years. It's 38 million this year. They're going to do $4 billion in 2020. You're going to be like, oh my God, this company's a buy all day. I got to own this company. Okay. Let's go look at the chart here. We go back to the chart and we go back 10 years. 2016, 2017, they were $25 a share. They're at 10 today. So how did that happen? How is revenue up over 100 times and they're at a loss today? Well, there's a couple of ways. One, income statement. They went from losing $100 million, and along the way, they lost 2.6, 1.6, 1.2, a billion, 925, and 560. They've not made money since. In addition to that, shares outstanding. They had a billion, and now they're up to 1.6 billion. So they've issued shares and diluted people, and they've lost money hand over fist. Guys, that's how companies, over long periods of time, if they don't make money and add shareholder value, the stock can still go down. If you overpay for them, the stock will still go down. Let me give you another example. Let's look at Intel. Intel is always my prime example because I love looking at this company to show people. Intel was the darling stock of 2000. Let's go look at the max chart for Intel. In 2000, the stock hit a high of around $75 a share. This is 2000. If I told you in 2000 that the stock was going to go nowhere and it's actually going to be down to $38 a share in 2022, you would have literally had me institutionalized and arrested for being a liar. You'd have said, you're an idiot, Paul. You're so stupid. Not only that, let's go to their revenue. Back in 2000, they did $30 billion in revenue and had $8 billion in profit. Now let's go back to last year. And the reason I'm going to do last year is they did $78 billion in revenue and $25 billion in profit. 2.5 times more revenue, triple the profit. And the stock is still down in half. Why? Because when you overpay for something good, you will still potentially lose money. Now, with Snapchat, the question isn't, the question is, can you still value a company that's losing money? Absolutely. Guys, every investment, the present value of all future cash flow. And let's say over a few years, -2, -3, -2, breaks even, makes 2, makes 8. This is a stream of cash flow. And there's an IRR here based on what you pay. And the more you pay, the less your return. The less you pay, the higher return. Look at Amazon as a prime example. Let's go find Amazon because Amazon's a company that everybody in the world loves. I use Amazon. I talk to my Amazon more than I talk to my fiance. Let's look at Amazon revenue and profit. Let's look at 2003 to 2012. This is their profit numbers. It's piddly. It's nothing. It's nothing, guys. It is nothing. They made very little money. Very, very little money. And then all of a sudden, what happened? They actually started to lose money. And then it started to skyrocket because they were investing and investing. So if you believe Snapchat is investing like crazy, and you'll be able to see that in their financials, and you can see a path to profitability, That's how you invest in a company like Snapchat. The problem with Snapchat is, my question is, how do they make money? How are they going to how are they going to start making money? And until they start making money, how are they going to fund those losses? They have to issue debt or issue shares. They've already issued a ton of shares in the last since they started in 2017. They're diluting the heck out of everybody. So they take on more debt. It still loses value for the company. That's the hard part about these businesses. So the question is, what do you do from here? Well, if you're new to this channel, I'm Paul. I'm a value investor. I believe it's possible to overpay for a good thing. In fact, most people overpay for a good thing, and that's what causes losses. So even though a company has a great future and great potential, you can still lose money off of it. My example is, we don't give the first pick of the baseball draft out of high school a $100 million contract. Why? They still need to go to the minor leagues and prove their way along the way, and they get paid along the way. We can't give every future potential the maximum dollars. But that's what you're doing when you're giving Snapchat a $100 billion valuation when they only bring in $1 billion in revenue, or whatever it was years ago. That is the hard part. So my goal is to teach you out there what I learned 15 years ago, because I used to be in your shoes exactly. I used to believe you buy growth and you don't care about anything else because growth will win. And then I started to realize, oh my Lord, it is possible to overpay for a good thing. And it's possible to underpay for a great thing or a bad thing even. If a business is dying, you can still underpay for that dying business. Think that's crazy? Let me give you an example. Let's say a business is going to make $5, then $4, $3, $2, $1, and then go to $0. That's $15 in cash flow. Isn't that worth something to you? If you pay $1 for that, you're going to make a lot of money. You paid $1 to get 15 bucks. If you pay 20 for that, you're going to lose money. You pay $20 to get 15 back. If you pay 10, you're going to make a little bit of money. The point is, there's always a price to be paid. If you remember that, that's always a price to pay for something, you will do very well in investing. That is the key here with Snapchat. Are you overpaying for something? I believe you're overpaying for a bad thing here, which is the worst. Overpaying for a good thing, okay, I can understand that somewhat, but I think you're overpaying for a bad thing here. Now, my friends have texted me since our video the other day saying, Paul, Snapchat's still very, very popular amongst people. Great. Our intern Nate says, hey, you don't even ask people for their phone numbers anymore. You just give them your Snapchat, and that's how you connect. Very well could be the case. But I'm not seeing the whenever people meet me, they don't go, hey, what's your Snapchat? It's like, oh, what's your Instagram? Now, maybe that's my demographic, probably. I don't know. But I look at Snapchat and say, how are they going to make profit to justify the return on investment? When I look at a company that is currently valued at, what are they currently valued at? Let's go back to their main page. Snapchat is currently market cap of $16 billion. I want to see at least $1 billion in profit with growth potential for me to even be interested in the company. But they're still losing $500 million a year. That's $1.5 billion swing that we have to get out of. Now, the good news is very high gross margin. But the question is, how many more dollars of revenue can they bring in there? And they already warned about headwinds. And look at Snapchat. The second Snapchat started their stories, everybody loved it. Instagram and Facebook did it, and they crushed it. The Instagram stories are so popular. I deleted my Snapchat. I was like, I'm done with this. Now, you might sit there and say, well, yeah, it's because you're a boomer, Paul. You're 41. Very well could be the case. Very well could be the case. But I look at Snapchat and say, what is the potential for it? Could it still be around in 10 years? Yes. But do I understand how they're going to make money next 10 years? No. So I'm out. So if this makes sense to you, I ask you to do two things. One, subscribe to the channel, and two, watch our next video on our 8-pillar process so you can see how we actually look at companies that generate profit and cash flow. Thank you.